Good afternoon, everyone. Today is Tuesday, the 27th of December 2011. Hopefully, everyone had a good long weekend and feels rested. The market is still in rest mode as we saw very light volume once again. That was to be expected. But we did show a slight gain here for the S&P 500. Fortunately, there was some better action, that is, in some of the individual stocks. The story remains kind of the same in here. We're still getting higher highs and higher lows, but we're grinding higher on lighter volume. And it seems as though it's getting a little bit tired up here. There's nothing that says the market is turning back lower, but we have had a decent little rally, and we're getting to the top end of this recent range here. So it makes sense to just obviously be defensive. We do still have that inverted head and shoulders pattern that is basically in play here from the last 2 months or so. So we want to be aware of that. But again, just breaking a trend line isn't enough to get us to consider buying and thinking that we're going to retain that 138 price objective. Again, the question always is, where has the market come from? Where does it have the potential to go? And in that, you want to add how likely is it to continue based on where we are. We're just above that 200-day moving average. We're just below some key resistance. And we've gotten here after a decent little rally from 120 and a half, basically. So about a 6-point rally over the last 6 sessions on diminished volume. So it doesn't seem likely that just a break of a trend line is going to be enough to really kick this market back into gear. You can see the longer term trend line we've been observing since July is still intact here, and simply getting above there for a day or two isn't going to be enough. It would still be better to see this market pull back, even still down towards about 125 and a half. Now we are in a seasonally, what is typically a seasonally strong period, that is time of year. So that's something to be aware of. And it just feels as though maybe this market's going to drift into 2012. And again, 125.75 is the psychological barrier to hold in terms of close. Whether we close flat, up, or down for the year. And that really shouldn't matter so much, other than an interesting observation, I suppose. But the market has become more constructive. We're holding that volume weighted average price since the beginning of the year, and it is still somewhat constructive, but the volume makes it suspicious, I suppose. The Nasdaq was 16 cents higher, and coming up to its 200, or I'm sorry, rather its 50-day moving average. We also have, of course, right up in that area, this downtrend line right here at this 56 area, and the 50-day moving average. If we wanted to take a look at the exact number, we could do this and make that a snapshot view. We have the 50-day moving average at $56.50 right now. So today's high 42 cents. So we came just short of that, and of course this trend line. So maybe we still get that pullback. Again, 56 has been the big level for us that this market has been battling with for most of the second half of this year. And if we get, we're holding above that. As I said over the weekend, I don't think it would be a bad thing to see it drop down as far as about $55.60. If that were to happen, I think we'd still be okay, and that might actually scare some people out, and then we'd be able to push higher. But we still are within this triangle as well. There's nothing clear that says we are going to break higher. That's not the point. I'm not trying to create this wildly bullish scenario. What I'm trying to do is to say, here's how things could unfold in a bullish way. Back below 55 and a half, in particular on a closing basis, then I would lose a lot of confidence that that's a scenario that could actually play itself out. The Russell 2000 did break this trend line. It's above that 150-day moving average. That's 2 days in a row. And again, it's not that the 150-day moving average is an important one necessarily, but it's become important to this particular market. We have these higher lows in here as well. This market did get, it broke past a little bit of resistance there at about 74.60, and that's really where it kind of took off today as well, was 74.60. It was a nice little range leading up to it, and as it broke that, it took off just beautifully right up to daily R2. I mean, that was a really nice trade in there today. Hopefully you've taken advantage of it. I was talking about the strength of the Russell right over in here, and and whether you wanted to put your stop at that point below the daily volume weighted average price or below this little consolidation was up to you. But again, that was a nice little trade up to that. We're still, we've still got these levels up above that we have to be aware of. We've got this horizontal resistance at about 75.60 and the 200-day moving average at 76.30. So those still remain levels to be aware of. The 10-minute time frame, we're getting a little extended here, but we broke that base. So short term 74.50, and then if we break back below 74, then we want to definitely adjust our risk outlook and consider that maybe we have to become a lot more defensive here. But again, a lot of individual stocks were moving nicely. The semiconductors closed back above 30.50 again, so they're 30.65. 30.50 on a closing basis isn't so important because it's just below, and we've had a nice move to get to where we are. I would give the semiconductors down to about $30 before I really became concerned. A pullback to 30 would be okay, but the daily chart still kind of a big friggin' mess here. So if we draw a trend line that looks like that or like this, we're still battling those trend lines. And of course, we've got the 150 and the 200-day moving average just above. But 31 and a half, then 32 do look like reasonable levels. It would be nice to see that pullback that refreshes first. However, financials still closing above that 1280 level, and as I said over the weekend, I wouldn't like to see it pull all the way back to 1280 or 1270. I'd prefer to see maybe 1295 ish hold, but we'd still be okay holding above 1280. That's obviously been the big level for quite a while. I don't need to go into the importance of that. It's also where we have that 10 and 20-day moving average starting to come up. We've got the 50-day moving average right now at 1287. So they're all kind of in that same little area. And if we can continue to either consolidate through time or a slight pullback, a pause that refreshes, then we can put our sights up to the 1340 and then 1370 and eventually 1420. But still a lot of work needs to be done to get there. And in such a light volume environment, you have to have your guard higher and remain somewhat suspicious. Great movement today, though, in Alexion. Did break out nicely here, so creating an all-time high in Alexion. And again, that's not a stranger to the new high list. If you took a look at it, this morning it broke that little level from Friday, continued nicely, and blasted right up through that daily R2. So I'm not going to continue to, excuse me, follow through on this one because it got a little bit extended here, but it's at all-time highs. If you're in it, I'd say worst case stop down at about $70.80. DY, I still like Dicom. This was a nice little consolidation in here today. If we look at where this move began at $20.20, that was 3 days ago. We're holding that 3-day volume weighted average price. That's nice to see. We have a lower high each of Thursday, Friday, and then today. So I think getting back above today's highs at $21.29, that this could get moving nicely. Now we have what looks like a little flag forming, and above $21.29, I think you want to really pay close attention to this one. With a worst case stop, I'd say probably down below 21 if you wanted to be, maybe below today's lows. But I wouldn't give it, if it broke today's high, I wouldn't give it past to just below 21 as far as a stop goes. But definitely keep an eye on Dicom tomorrow as well. Ebix had a great day. Really just broke that level that we've been looking at here, and the 2140, and just took off beautifully. Continued to move higher, sliced through that R2, and then had a really nice consolidation holding above it. Another push above that level, and then we'd seen the volume weighted average price tested. So twice today, we had it hold VWAP and daily R2, and then another volume push. We saw it hold VWAP, and then another push higher. We did close below the volume weighted average price for the day, which is kind of interesting. But I would still keep this one on the radar for tomorrow. It's a little extended short term, but keep an eye on that one. It definitely looks like it has the ability to continue to move higher in here. Glue didn't really do anything. It continues to just sit there, but it traded 722,000 shares, so that's decent volume just on a absolute basis. And set an alert, maybe $3.32 maybe we could get this stock to move. It's one of those little ones that kind of gets going nutty sometimes, in particular at the end of the year. So keep an eye on that one. Groupon. If we take a look at the volume weighted average price since the IPO, that is all the after hours trading, we can see that we are above that. And is that correct? Did I just draw that properly? Let's start that again because I thought. I think I drew it incorrectly last time I looked at it. So we remain above that, is what I should say. And it is a choppy stock in here. This is the level we're kind of looking at about 23 and a dime. We got punched up through that level, and then it kind of got a little squirrely in here. I don't think you should have held it at the end of the day once it got below, particular volume weighted average price. It looked like it was going to try to get going and broke below it. I would keep an eye on it back above $23.30 tomorrow. I think that could, this could be just that little jiggle before it gets going. Above 23.30, I would keep an eye on Groupon tomorrow for sure. INT we had looked at, and it was late volume in here, 311,000 shares today, so a third of what it normally does. But if you're looking strictly at price, I had mentioned it in here that it was looking good and looking like it was ready to, or just as it was getting going, I'd mentioned it. I think I had bought it and then mentioned it, but. Anyways, it had a nice run in here today. The volume was light, though. If you're still in it, worst case stop would be entry. I would continue to monitor this one. This is an important level on the longer term chart, up at all-time highs. So it still has the capability of making a bigger move on a break past the highs on the weekly chart. So keep an eye on that, but you got to trade it lightly. And most of these stocks you have to trade with light volume because of the lower, seasonal volume. Intuit traded 1.2 million shares. It's a liquid stock, obviously, and it's holding up very nicely in here on that daily and weekly chart. The range is pretty tight here on the 10-minute time frame, and it's looking like this is the level here at about $53.45. So if we can get above maybe $53.45, I think you want to definitely keep an eye on this one tomorrow. I'd say at this point, worst case stop, I wouldn't give it down to maybe 53 and a dime. So nice risk reward ratio above 53.45 right here, this high. I think you risk 35 cents in a very liquid stock that could get going nicely here. So that one should be, I think, top of the radar list. Leap didn't do anything here. In fact, it broke down. So maybe you set an alert at 8.5. But again, it's a broken stock on the daily chart, still trying to heal. So I wouldn't pay real close attention to it. Maybe you put an alert on it, like I said. Men's Warehouse finally broke these highs that we've been looking at, about that 32.65, and had a nice little pop right up to and just beyond daily R2. It did close below the volume weighted average price, but it's still got a nice looking daily and weekly chart here. So keep an eye on it, but the way it pulled back in here, I wouldn't think it's a high likelihood stock to move tomorrow. Trimble Navigation, nothing happening here, but we're still holding up near the highs in a tight range and on diminished volume. That's again the volume pattern for the entire market, but we've got that 45 level that seems to have some sellers stuck up there, and if this market can push through those through that level, that is, and these highs were 45.04, I believe. So back up beyond 45.04, I think Trimble could make a nice move. It was light volume though here today, so be aware of that. 180,000 versus an average daily volume of 526. CTSH still looking vulnerable. If the market sells off, this would be a good one to go to. I'm still just really hesitant to sell short in this environment, though, with this low volume environment at the end of the year. So keep an eye on it, but keep your stops really tight if you decide to get involved. Lazy Boy, light volume in here today, 385 versus an average of 850. It's got a nice looking weekly chart, though. You can see it's holding up at this prior resistance area on the daily time frame. We've got it, above a 10 and 20-day moving average. So it looks like 1220 is really the important level here. It's been touch last Thursday and then again today. So you maybe set an alert at 12:15 and then decide to watch it. If you get involved, I would say worst case stop 1170-ish, 1175 maybe. Nuance and UAN continues to hold up nicely. It traded 1.9 million shares here today. This one we know from last week. This has been an important level at 25 bucks. It was support that became resistance, now holding still above that level, and the range is kind of tightening in here. It's, we've got the higher lows above the rising 5-day moving average. And it looks like you break these highs of 25.80. Absolute worst case stop below today's low, or maybe even Friday's low. Just give it a little more wiggle room, maybe about 25 and a quarter. But definitely keep an eye on that one. And finally, Zynga. I was going to mention it here at the end of the day, but I didn't expect it to go. If you take a look, here's the volume weighted average price year to date. That is since they came public, and that is right now at about $9.64. Today's volume weighted average price down at 955. So if we see a pullback in towards that 965 level tomorrow, that could be a really nice place to watch for it to bounce from, and then to take advantage, because here we are, this video game, hot technology recent IPO that came public, I believe, at 10 bucks a share. So there might be a little resistance based around that offering price, and there is a large float, so it might not move real easily. But I would keep an eye on Zynga tomorrow as well.